Hey you guys, I'm back with another video, and this time we're talking about home loans. Everything you need to know about getting a pre-approval, actually going through the approval process, finding a home, and closing within 45 to 60 days. So let's get straight into it. The first thing that you guys really need to know is that there are three different types of home loans. You have a FHA loan, a VA loan, which is through, for veterans, and then you also have a traditional home loan. So for a VA loan, you minimally need to have a 600 credit score, and you have to actually be a veteran to qualify for that loan. For a FHA loan, you need to minimally have a 620 credit score, as well as with the regular traditional home loan. So the great thing about a FHA loan, which is what most people try to qualify for, is because you only have to put 3.5% of a down payment on that particular home. If you do the traditional, they can require you to put down up to 20%. So it's always great for you to shoot for a FHA loan. As long as you are a first-time home buyer or you have not bought a new home within 3 years, then you actually can qualify for a FHA loan so that you can put the 3.5 deposit down so that you'll be able to purchase a home through that loan. So getting straight into the pre-approval process, there are a few documents that you must submit. When it comes to buying a home, it's a little bit different from getting an apartment or just renting. They are going to ask for official documentation from the IRS because you need 2 years of tax returns. You need 2 years of W-2s. You need at least 6 months of bank statements and check stubs. Within the last 2 years, you cannot have switched jobs. If you have switched jobs, it needs to still be in the same industry. And then you also have to be able to show proof and provide all type of financial information as far as reserves. Reserves is just saying how much money do you have saved up to go towards this home. And then they're also going to want to check your credit score, of course. So when it comes to your credit, the best way for you to know you're going to be approved for a home loan is minimally you need to be at a 620. I know they say that you can get approved for some home loans with a 580, but you never want to do that. And that's because a 580 is going to get you the worst interest rate. You want to make sure that you're going to get the best interest rate possible because that makes the difference between you spending 10 years in a home loan or maybe 15 or 20 years or maybe 25. So you always want to make sure that you're getting the best interest rate possible up front. If you end up getting a home loan without the best interest rate, it's important for you to know that you can also refinance later, but you want to do it closer to the beginning of the loan so that you can, you don't have to spend 10 years and then refinance and you've given them so much money that could have just went towards you paying off the actual house. So after you get all your financials out of the way, which is super important, when it comes to your credit, main thing that you need to know is that you need to have minimum to no collections or charge-offs. Collections accounts, they honestly will kind of let you make it on, but charge-off accounts, which is something that you had a signed contract on, they either want them removed or they're going to want you to do some type of settlement to show that they're paid. But as you always know, it's important for you to go through the process of credit repair if you have those type of accounts, because if you have $5,000 to $10,000 worth of debt with charge-offs and collections, you can pay a fraction of that by simply just getting credit repair, going through that process, for 4 to 6 months. That also gives you time to actually save your money to go towards what you need to pay on that actual home. So it's important for you to know and understand minimum to no collections or charge-offs, very minimum inquiries as well. You want to make sure that every credit card you have honestly is paid down to 20% or less. Even if you can pay them completely off, that's great when you're going through the pre-approval and home loan process, because you want to make sure that you're going to get the best rates possible while you're going through this. After you finish purchasing your home, of course, you use your credit cards how you please, but if you can pay them down to 20% or even 0, that would be the best bet for you and your family to get the best rates. So now that we've gone through the process of the documentation that you need to get pre-approved, the credit scores that you need to get pre-approved, your next step is actually going to be, I got my pre-approval. So your pre-approval is based on how much you make for how much they will finance you on. So you have to know and understand that if you are making a little bit less and you are looking to purchase a home that may be in the higher $200,000, $300,000, maybe $400,000 range, you are going to have to get more income and supplement that. I've had a client before where she purchased a home with a VA, and she knew that she was going to be getting some additional benefits from her husband's Social Security. So she waited until she got that money so that it would boost up how much they would approve her for. So the same thing has also happened for another client of mine who was a single mom. She actually got a second job for about 6 months to a year so that would also help boost up her income, so she would get approved for a higher home loan. So there are a few things that you can actually do so that you can boost your income to get a higher home loan. You just have to kind of give it a little bit of time for that to kick in. So now that they've approved you for whatever amount that you're going to get for the home loan, it's time for you to shop for a house. This is where your realtor is going to come in, but it's super important for you to get a quality realtor. And the reason that I say that is because some realtors, sometimes they are just in it mostly for the money and not at your best interest. And you want to make sure that you're going to have a realtor that wants to save you as much money as possible and not really focus on getting you to pay out a lot. Because you have to remember, you have to purchase a home, move in, buy new things, and this is going to be your home, you know, for the majority of your life. So you want to make sure that you're paying as little as possible initially to get in that home. Your realtor needs to let you know about any type of down payment assistance programs, grant programs that they may have to assist you with down payments. They also need to make sure that when you're going through the closing, either the closing is going to be covered by the seller, or y'all come to some type of agreement to where y'all split the closing costs, or it's completely covered for you, because all those things are going to end up being additional money that you have to actually pay when you're purchasing your home. So remember, get a quality realtor. Make sure when you're searching for a home that your realtor knows and understands your budget. And once you find one, there's an important thing that you need to do if you come upon a bidding war, which is super popular right now due to the pandemic. The housing market is super crazy. There's not enough houses for people, and I've seen people get outbid over $2,000. So the way to set yourself aside from anyone else when you're going through a bidding war is to write the seller a letter. Let them know, hey, I want to buy this home for me and my family. This is our first home. I really want to, be able to have my kids in a better area and neighborhood so they can grow up together. Whatever it is that is the reason that you're buying this home, try to present that to the seller when you make your offer so that they can take all that into consideration once they start getting other offers, because that'll kind of warm their heart and say, hey, you know what? I want to give this to a good family. So that is a tip that you can use if you're in a bidding war. Once you've found the home and you've put your earnest money down, so once you confirm you want to buy the house, you have to put earnest money down, which is a deposit saying, hey, I want to buy this house. I'm going to give you this deposit to hold the house so that I can go through the process of finishing up my financing with the bank and the mortgage company so that I can fully be approved to purchase the home. Once you've gotten that out of the way, now you have to get the home inspected, which can roughly be about a $1,500 fee for them to go through, inspect your home, make sure that everything is up to code and there's nothing that could be affecting you once you move in the home. You never want to move in a house, and as soon as you move in, you have to start fixing problems. So going through the process of putting earnest money down, which is usually 2% of the total cost of the home. Then you get your inspection on the home, which is about roughly can range from $1,000 to $1,500. Once your inspection is completed and it has been approved, then you're going to go through a 45 to 60-day closing process with them finishing up the paperwork, getting in your inspection. They're going to do a survey of the home and the land that it's on, all that background work that they need to do to make sure that this home is clear for you and your family to move in. Now that you're at the closing table, you're going to have to be faced with closing costs. Now, down payment on a home and closing costs is two different things. Yes, you can get assistance with down payments to where you don't have to pay a down payment, but for the most part, you're always going to come out of something with closing a home. Most of the time, either the buyer pays the closing, but again, that's where it's important for you to have a quality realtor, because if you have a good realtor, maybe the seller will cover the whole closing costs, or half of it. Closing can range from $2,000 to $3,000. So you want to make sure that you're going to be saving money as much as possible. In general, to purchase a home, go through the whole process of closing, it can roughly be a $6,000 to $8,000 process. So anywhere you can save money is best. Because remember, you still have to move, get new things, and do whatever it is you want to get done to your home. So once you go through closing, the house is now yours, but you should also be aware that you have to get insurance for your home. You also have to consider that you may have HOA fees depending on what neighborhood you're in, and that is something that's totally separate from your everyday mortgage that you're paying. Your property taxes and your insurance can be included in your mortgage, but it can also cause your mortgage to go up a little bit. But the HOA fees is something totally different that you have to pay either yearly or quarterly during the year. So you want to make sure that you're aware of all fees that are associated with that, because if you can't pay it quarterly or when it's supposed to be paid during the year, it's always best to pay it, during tax time or a time that you're going to have some extra funds. So that is the full process of what it takes for you to be able to actually go through the home loan process, get your pre-approval, find a home, and close on it. If you have any other questions, please drop them below, and make sure you like and subscribe for more videos. Thank you again for hanging with me here at Rose Credit Repair. And don't forget, like, subscribe, comment below if you have any credit questions. I'm going to be answering them myself in the comments. So you know what to do. Until next time.